The recent conflict between Hamas and Israel has sparked discussions among oil experts and analysts, drawing parallels to the Yom Kippur War that occurred 50 years ago. However, unlike the previous conflict, experts do not anticipate a significant impact on oil prices this time around. Ed Morse, the global head of commodity strategy at Citi, believes that even if the war were to escalate and involve Iran, oil prices would still be capped at $100 per barrel. This video explores the reasons behind this prediction and provides insights from other industry experts. The Yom Kippur War, which took place 50 years ago, resulted in production cuts by oil-producing nations in the Middle East, an oil embargo, a surge in prices, and fuel shortages. This historical event serves as a reference point for analyzing the potential impact of the current conflict between Hamas and Israel on oil prices. Ed Morse, a veteran strategist and global head of commodity strategy at Citi, believes that the current conflict is unlikely to cause a significant increase in oil prices. He points out that the market currently has a surplus of 4.5 to 5 million barrels per day of spare capacity. Morse suggests that if prices were to rise above $100 per barrel, the spare capacity held back by Saudi Arabia, the UAE and Kuwait would be released into the market, stabilizing prices. Morse highlights several factors that contribute to the limited potential for a significant oil price increase. Firstly, he mentions slower or no growth in regions such as Europe, China, and the US, which reduces the demand for oil. Additionally, the cuts in production capacity made by oil-producing nations have created a buffer that can be utilized if prices rise too high. Pavel Molchanov, another experienced energy analyst, shares Morse's view that the conflict is unlikely to have a substantial impact on oil supply from the Middle East. He believes that it would be a grave mistake for Iran to engage in a war with Israel, and does not consider the Iranian regime to be suicidal. However, Molchanov predicts that oil prices could reach $100 per barrel within the next 6 months. While the current conflict may not immediately lead to a spike in oil prices, the possibility of reaching $100 per barrel in the future could have implications for drivers and the Federal Reserve. If sustained, increased oil prices could result in higher prices for other goods and services. Conclusion: despite the recent conflict between Hamas and Israel, experts do not anticipate a significant impact on oil prices. Ed Morse and Pavel Molchanov both believe that oil prices will remain capped at $100 per barrel, even if the conflict escalates. Factors such as spare production capacity and slower demand growth in key regions contribute to this prediction. However, the potential for oil prices to reach $100 per barrel within the next 6 months remains a possibility, which could have broader implications for the economy. As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.